Today, I'm going to introduce something really exciting, something that sits at the heart of space missions, national defense, and cutting-edge science. I'm going to be introducing aerospace timing systems, military-grade frequency control, and quantum oscillators for next-gen computing. 3 groundbreaking technologies, each in a field of its own. The kind of tech that guides satellites, defends nations, and pushes the boundaries of physics. So, aerospace systems, defense electronics, quantum timing tech. Are these 3 separate companies? No, these aren't 3 companies. These aren't 3 different visions. This is one company, and it's called Frequency Electronics. The ticker is FEIM. So basically, this company, like I mentioned, has space solutions. They have a huge role with satellites. They will be a massive beneficiary of the Golden Dome, which everybody has been talking about and has already received some funding. Now, I have Lockheed Martin's page here, and they are a partner of Lockheed Martin and quite other few likely beneficiaries of this project. Now, quantum has been very hot and a huge topic. They have quantum sensing technology. And a lot of people, when they think of quantum, they think it's way in the future. Some people don't believe that it's going to come. Whatever it is, frequency isn't a word of quantum, like IonQ. It's not just a big mouth CEO who does nothing but says everything. Frequency is actively generating revenues from quantum. This is as legit as it gets. Now, I've told you all these things, right? Aerospace, quantum. Instantly, what I'd imagine you'd think is you think of companies like, for example, Rocket Lab, decently large market cap compared to anemic revenue and fat losses year after year after year. When I say quantum, you guys probably think of the exact same thing. Decently large market cap compared to, once again, anemic revenue and bloated losses year after year after year. So can you make money off these? Of course you can. Just like you might make money buying a lottery ticket. For some people, they do want to play the greater fool theory. They do want to speculate. I'm not against that at all. The purpose of this video, though, was to introduce you to frequency, which does these things, and unlike the others, they are actually profitable. As you can see, you're looking at a single-digit PE on pretty solid growth. Now, I will have to admit this PE is artificially low due to a one-time tax provision. So that being said, the real PE is more like 17.7 at the current price. But I can tell you 17.7 PE with 38% top line growth and huge bottom line growth, which isn't really comparable, is a really good deal given the sectors it's in. Now, if I'm to click the all-time chart, you see a pretty nasty graphic. And the reason is because for quite a while, these space solutions have been kind of on-off. Sometimes there's more space spending, sometimes there's almost nothing. And so has this company's profits. So that being said, we could be looking at this at a cyclical peak, but I'm under the current impression that space will no longer be cyclical spend, and the addition of things like the Golden Dome and just the progress with quantum, it really being kind of looked at with a closer eye, I think this company is just the correct beneficiary. And if you're to look at a bunch of other quantum or rocket stocks, you're going to see that they have these nice parabolas. So it would have been really good to buy early. As you can see, now I'm showing you the year-to-date on frequency. It's been a huge laggard relative to the sector. So sometimes I think it's a bad idea to buy the losing stocks. Sometimes I feel like it's a good idea. Ultimately, it's clear the market does not respect frequency. Will that change in the future? Maybe, maybe not. But I do think that with the other aerospace and quantum stocks, for the most part, you're speculating to such a large extent that in any single bear market, you're going to lose probably 90% of whatever you invested in those companies at the current price. Whereas with frequency being a more high quality and real business that's not all talk, I think you're definitely looking at a better bargain. Now, I'm not going to directly compare speculation to value investing, but I do think for the most part, people like myself who do take a tiny glimpse into, just the value of a company, for the most part, it's made it very hard to invest in this section. So frequency is really that alternative. Now, it is a micro cap, but the liquidity is not too bad. It recently joined the Russell 2000 and 3000, so a decent accomplishment. Nothing too crazy though. And just looking at the recent quarter, you can see that the majority of their revenue is from satellite payloads. That's followed by just non-space government contracts and such for defense primarily. And then lastly, you have commercial and industrial sales, which are a tiny 2% of their revenue. So the biggest risk here is that essentially all their revenue is government revenue. So in some ways that's good with potential stability, but as the government's going through different administrations, you always do have that change. But for the most part, with Trump being in for the next few years, it's not too much of a worry for now for the company. Something that does really kind of make me a little uncomfortable is that their most recent quarter backlog was a mere $73 million. And that's less than their backlog 9 months prior. So typically these companies that do have a backlog, I would like to see it continuously grow. It's just kind of a good insight into the health of the company. So while this is not necessarily a bad sign, it's definitely not as perfect as I'd like. But ultimately, when you're looking at this kind of valuation in the sectors, I feel like you really can't ask for too much. Now, one thing I should also probably mention, and this is somewhat of an internal conflict I have when thinking about this stock, is when you have a company like, say, RKLB or IonQ, the fact of the matter is everybody knows these are fairly low-quality companies that keep burning cash. Maybe they would argue they're high-quality companies, but I think everybody knows the truth is they keep burning cash. They've done it for years, and they'll probably do it for the next half decade to decade. The fact of the matter is, when you know that, you don't have any expectations. They have a terrible quarter, nobody cares. Who cares? It's not like anybody expected them to make money. Everybody knows they're horrible at making money. Put something like frequency in the picture. They are making money. People like me who want to long this know they make money, and I expect them to make money. I've added that expectation, and I'd imagine many investors in this company have done the same. So in some ways, the fact that they're actually somewhat profitable and successful is actually a double-edged sword. Because while you've added a decent aspect to their business and turned it away from pure speculation, you've actually added all these expectations that could potentially be missed. Where Rocket Lab shareholders may party and celebrate over every minor contract win and look forward 5 to 10 years into the future of what might happen, frequency shareholders are looking at each quarter. One quarter with a tiny, a revenue amount that's not really up to par, and people are going to be very upset. That would never happen in Rocket Lab or IonQ. So that being said, I guess this is how I should leave it off, If you are looking for a decently high quality company at a reasonable price, this is your bet. But keep in mind, you actually need to be correct in the growth of this company. If you're looking just to speculate and hold something in this section, you can always go with something like Rocket Lab. But at the end of the day, you're investing in a business that just loses money. So all you're hoping is really that other fools, per se, will buy it off you at a higher price. Both strategies can work, and I'm not the person to say one is necessarily better than the other. But yeah, I guess at the end of the day, the choice is yours.